business, recycling anesthetic gas in operating rooms, they're looking at the number of hospitals and looking at globally how much is actually spent each year in that sector on anesthetic gas, and it's a $1 billion market. But then looking at the number of operating rooms, you've got to think in your own business, what's that unit of measure that's going to be the determinant of market size? And in this case, it was operating rooms. And then looking at how many other dominant players are there, you can throw that in. 3 key things to think about with respect to market opportunity. Is it large? Where is it located geographically? And is it growing? Look at the growth rate. Those are 3 key clues. If you actually don't know in terms of the number of operating rooms, because that's easy to get if you're in B2B, and you're in something that's more small business, like Kirk Simpson over at Wave Accounting. It's another company that's killing it. They've done about $20 million in venture financing now with companies like Charles Rivers and Omers. Just a wonderful homegrown success story, case study for me. But Kirk, actually, when we worked with them in the very early days, we were looking at the whole market size, and he knew that he was going after a major persona here, which was this free agent nation of close to 30 million people in North America that aren't organized the way they want to be around their accounting. And what he looked at was some powerful trends: the explosion in software as a service, the move from paper to digital, people going more mobile with smartphones, and a lot of people wanting to actually see what other people were spending in certain categories in this area of collaborative consumption. What was important was although Kirk couldn't tell you down to the exact SMB number what he was going to have as an addressable segment, we knew it was large, we knew it was massive, but having a really good understanding of the persona that he was going after and the formative trends that were aligning with the growth have made these guys really, really successful. And if I'm not mistaken, I hope I haven't misquoted this, but I saw recently on their website, they're close to about 130 million bank accounts that have been linked through Wave Accounting so far in the software. And I'm probably even light on the number because I'm sure the website hasn't been refreshed. When you lay up your accounts, it's important not just to do a logo soup, but here's some of my accounts at Speakerfile and how we look at it. We actually look after 8 different sectors. The newest one we're turning up is higher education. But we service legal, financial services, healthcare, consulting, media publishing, technology, and trade association. So I've got large clients like RIM, Cleveland Clinic, and such. But what's interesting about all these sectors is that they're knowledge-based industries, and that's how I describe it. And we've got reference accounts in most of those sectors now that are global in nature. Very important. I hate seeing logo soup because I don't know how you're categorizing your market. This actually makes you look fairly tidy and fairly professional, and that you've got some market focus. Your go-to-market strategy, going back to Wave Accounting as a good example, you may not have an innate understanding of every little thing you're going to do when you go to market, but the investor needs to see some sort of a plan. Has Kirk executed on his plan? Brilliantly. And the plan that they had originally was to build a very big business using these kind of strategies of PR, vertical communities, advertising, offers, value-added offers, and a focus on customer service from a retention point of view. And I like the fact that there's 2 messages here because a SaaS business is often about retention. It's not just about customer acquisition. You want to avoid those churns. So now we're coming into the home stretch around the clubhouse turn now into unique advantage, around 3.4 minutes that you would have for this chapter. Again, guidelines. This is partnerships. What sort of value, do you actually, what will they add in terms of research and development, or will they be market-driving partnerships that will take you out for sales and support? What sort of reputation do they have? Are they really a category fit? Because partnerships are extremely hard to nurture. They like to ride the wave. They don't like to start waves for startups. And I think you'll get a lot of questions related to partnerships if you don't have your stuff worked out in terms of why you're doing it. Are they Barney agreements? We love you, you love us. Let's get a logo on each other's website. It's another thing that a lot of people are going to dive into. And if they don't make sense, they don't have the right incentives, and if they're not aligned even from an M&A perspective where that potential partner might be able to buy you at some point, it may pull up questions. So when we also look at technology and IP leadership, this is the patent zone. Have you looked at filing any provisional patents? How are you different? Do you have process patents? Are you looking to license out? And if you are going to license your technology, then you are playing a patent game for the most part. Your team and advisors. So what you want to focus on is a very simple slide showing where they've worked before. When I can't see names of where somebody's actually worked, real company names, it's suspect. I hate to see something like 12 years of progressive positions in leading Canadian companies. That's where they worked, and I have no clue what that means. And it looks like you're hiding something. It looks like something that's at the top end of a resume. Be very specific with company background. If there's any pedigrees, like notable exits, where one of the guys worked for a company, it was acquired by Google, we love to see that. Investors do. Some of your planned hires, some of the key achievements that those people have brought to the party, those are important elements of this. So, for instance, this is a good example of how you can get the job done real fast. Do you want to work with a company that's actually on the Cisco website and has their solution embedded right there? The best way to explain this is we're working with Cisco, our name is Singraphy, and this is Cisco's website today. We are embedded with the channel, and we're out there selling Canadian and US banks as we speak. Enough said. Gets the point across. Again, here's a good example of a competition slide. I see so many people that do really, really light competition slides, but this is really important stuff. And it lends itself, this kind of a format, to showing. I've obviously cloaked some of the competitors here because this at one time would have been quite sensitive. And pick these variables very intelligently. This is actually quite a few. I would say half of these might work for the average business, but Kirk is being very detailed here for a reason, and he got great funding after this. The team example, let's bring that to life. Here's the kind of format that I've seen work quite well. If you've got a really well-known team, name brands like Aeroplan, BlackBerry Partners Fund, MIT, SAP, this is really impressive. We've got 4 major components going on in this company, Unata, which in fact showed with the Mars Angel Group today. Unata's got hipsters on the team. They've got hackers. And what's the final one? Does anybody know? Hackers, hipsters, and hustlers. Those 3 things. The hustlers that are the visionaries that can sell the deal. The hipsters that are design thinkers, often product managers. They have a design experience in some cases if they're designing for mobile and putting things together. And then that hacker at the code level that maybe is doing an algorithm that's patentable, that sort of thing. All very important components of a team. Dave McClure and at 500 Startups and many others are talking about the composition of these teams. And it actually applies across a lot of different markets. I add a 4th one. I call them 4H teams. Hackers, hipsters, hustlers, helpers. That's really important. And when you look at Unata, when you've got big people like Robin Axon and Duncan Hill from Mantella, and you've got Drew Green, who I worked with at Flow Network way back, who's leading up Shop CA, and people from EMEA and stuff. This is really important as well. Get yourself some good advisors if you don't have them, and make sure that you structure those deals accordingly, and that's certainly a whole different lecture. Very important, because it's not credible to go in if the investor's coming away feeling that you need some parental supervision and some mentorship. That's a real issue. You're just not going to get money. Which brings us to a compelling investment. At this point, the upside for the investors needs to be clear. You're actually presenting them an offer, and this is the way you should think about it. The key numbers, the revenues, the expenses, the EBITDA, your burn rate, your assumptions, your scenarios, all of those things like cost of acquisition and such that we factor in. They're going to ask a lot of different questions around the structure and terms. How much is in today already? What are the use of proceeds? How are you going to spend my money? What's your runway? How much time do you have right now in terms of cash before you run out? And if I put money in with all the other people that you're proposing to, where's that going to take us to? When do we burn out on the next round? Does that bridge to break even? And be prepared to speak to the pipeline. If you're saying you've got other investors committed, this gets to be very dodgy if you're misrepresenting the amount of interest that you're getting. So be truthful on that. You don't have to declare everything, but it's a very important game. And avoid those premature discussions around pre-money valuation and setting prematurely some money valuations with people. because those valuations are very subject to change based on the strategic nature of the investment, how much is being brought in, and how much money you may even need to raise by the time you're done the whole process. So at the end of the day, you want to make sure that both the structure of the deal, the terms, and the amounts are all coming together for the investor. And really, at the end of the day, what you're trying to do is come up with a very simple framework. It can be 3 years, it can be 5 years. If you've got a hockey stick that isn't building until year 5, you may want to draw it out a little bit more. But remember, the risk associated with a forecast that goes beyond 3 years in today's economy can actually be quite high. And investors are very savvy to this. Number of licenses you might want to put in, as well as revenue expenses, your gross margin, your EBITDA, and maybe show me how the headcount is building, because often that's a big component of cost. And then the financing and use of funds, that summary at the end is going to be the investment to date. You might want to put your government programs in or grants. If you're a scientist and you're applying for OCE and other things like that, you should give me a statement of that, because that's important for me to know. Especially if they don't need to be paid back and they were hard to win. It's a proxy for quality. Your current raise and your use of funds, I've shown you some examples here of some of the things that entrepreneurs will put up, saying this is where we're going to actually spend proceeds. And then what you want to talk about is some timing related to the financing round and any further financing that you know of that you believe you need to go back to the well on. So let's do a recap. We talked about real problem. We talked about the attractive market. We talked about unique advantage. And we talked about compelling investment as 4 major components. But I want to leave you with just a final summary and give you what I think the major attributes of a good CEO are, and the team at large as well. But I think when you're sitting across the table from me and you're pitching me, I'm looking for about 12 major things. I'm not really running a checklist, but subliminally, this is what's going through my head. I want to know that you're honest. I want straight answers to my questions. I want to make sure that there's some degree of vision there. You're a thought leader. You're unique. You've got some customer insight around this. You've been studying it for a while. It's even better if you're scratching your own itch as an entrepreneur and you've kind of lived through that pain, because the best entrepreneurs, as Rick Siegel likes to say, are those people that are fidgety. They're in line one day going, it doesn't need to be this way. Why isn't this process optimized? We need to build an app for this. You know, grab your pitchfork and torch and march with me in the streets. Give me a little bit of money and we'll fix this together. That's what we want to see as vision and chutzpah. We want to see resourcefulness. We want to make sure that as investors, you can make my dollar go far. I want to see logic. I want to see wise, pragmatic decisions. Drive, that genuine passion for early stage and an ability to execute and excite people. The humility is important. We talk about coachability. If I find an entrepreneur's got a lot of tude, I really tune out. It's very difficult. They may be a client, and that makes it even more difficult. But I'll tell you, there's a big difference between some of the entrepreneurs that I work with. When an entrepreneur is hitting me back every 24 hours with what I asked for, that entrepreneur can maybe get 2 or 3 times more value than somebody that's waiting 7 days. Sometimes I don't even remember what I asked for. It takes so long to get something back from a client. I like to see tight cycles. And remember, when you're working with investors, you better get back to them immediately, more than even family stuff sometimes, because the expectation out there is that you're going to respond as fast as possible with the best information, because everybody else is. 7, you've got to have some degree of leadership. We talk about it in big companies, but in startups, it's even more important that you have the ability to attract a team, to keep them, and to lead them to win. You've got to have critical thinking. You've got to be able to challenge your own as well as other people's assumptions. A lot of people are going to move you around and have all sorts of ideas for you, and you're going to need to very politely thank them for their time and move on and find your own true north at the end of the day. And the other thing that I really am conscious about, because I'm pivoting, because in some ways I had false positives in my own business. I had a Fortune 50 client tell me that they wanted me to build something. We kind of built it, got halfway through it, and it didn't seem all that interesting to a lot of other clients. That hurts. And that causes pivots in the business. So watch the false positive. That's part of critical thinking. Commitment is important as well. Somebody raised the point earlier about how much money do you have in. I'm going to be watching as an investor, not just the sweat you're putting in, but the real money, which actually counts for something as well. Patience. We call it tolerance to ambiguity. There is an incredible amount of ambiguity in startups that you have to realize is going to be there. If you came out of a big